Welcome, everyone. Good boy, Tucker. This is learning at its most fun.
All right. Welcome, everybody, to another Takeover Tuesday event. Derek Notman. We love the guy. Our team share a love for movies, so we
totally.
It's definitely adapted a little bit, our movie discussion, since the theaters have adjusted, but
right.
We love him. But he's the founder of Connector, and his team is out there every day gathering data in the field of what works and what doesn't to help you succeed digitally. I love his emails, and since our last session, I even follow him on LinkedIn now, and his content is just top grade as well. So even if you're looking for how to, see how someone in the industry is really making their voice be heard, Derek's the guy as well. He's an advisor himself who has just gone independent. So Congratulations, Derek. I'm so happy for you.
Thank you very much.
So he really understands what it takes. So we're going to kind of pick his brain today and hear what he has to say. So Derek, take it away.
Awesome. Thank you so much. And thanks everyone for joining us today. I really appreciate it. This is a topic very fresh for me. We even had to, initially publish this incognito. So I am definitely going through all of this still, and it's all very new and fresh, but also very top of mind for a lot of advisors. As she was saying, like I've been working with advisors for a long time and through my work at Connector. And I tell you, this topic comes up a lot. There's a lot of advisors are thinking this, but a lot are afraid to talk about it for obvious reasons. So hopefully we can just, go through my journey today. Don't worry, not selling anything. There's no agenda here. I just want to share my journey, my experience, what I've learned so far to hopefully empower some of you to think about things maybe a little bit differently, maybe challenge the status quo a little bit and see if making a change is the right thing for you. So we're going to get into this. And I say playbook because I'm not going to give you a step-by-step. This is not what that is today. This is not how to do it step-by-step. Although I have gotten a ton of feedback asking for that. So I think there may be a separate ebook coming out here in the future that will be step-by-step. Follow me on LinkedIn and make sure you stay tuned to that one. Okay, well, let's jump in here. So
yeah, it kind of helps you just see a discovery of a need. Because I agree, I train offices every day, and this does come up. So I agree, the ebook would be a great resource.
I think so. And there are others out there that have done it. There's some really great free resources already. But what I have found is a lot of them tend to stay more on the conceptual side versus the tactical.
Yeah.
And as any of you who have joined Connector, you'll know that I'm extremely tactical in there and break it down for you step by step exactly what you should be thinking about. So I think I'm going to do an ebook around that. Feel free to drop in some comments or do a hand raise if you think that's a good idea, but that's another day. We're not going to do that today. Mm-hmm. So starting an RIA and going independent, as I've said, it does receive a ton of press. You hear a lot of people talking about it, good and bad. But actually doing it, what I have come to find out, is a totally different experience than just talking about it or reading an article. And it is a very serious commitment. It is an in-depth process. And for any of you who have ever thought about it, this is an opportunity for you to think about things in a little bit more depth, but also get some context, get some things that maybe weren't on your radar initially. So you can hopefully learn from my journey and be like, oh, I didn't even think about that. Oh, maybe I should do that. Oh, maybe I shouldn't do that. So hopefully you'll get some of that as we go through this today. For those of you who don't know me, I'm Derek. Hello. I have been a virtual CFP for some time. And I'm also a fintech founder with Connector. And actually, this is my new one here, which you guys can go check out a lot more later. This is a new fintech company we're just launching. I have been an advisor in the insurance, broker dealer, and corporate RIA space since 2006. That's where I cut my teeth. but I was operating under a DBA, doing business as, since 2009. So I've kind of had this semi-independent, existence for quite some time now, but went fully independent and triggered that entire transition at the very end of December. So this is, 2 weeks ago. So when you're looking at going independent, I think the first thing that I would ask you to think about is, what is your objective? What's the single most important thing you would be trying to accomplish by starting your own RIA and going fully independent? I think it's really, really important for you to know your why. I actually had 3 whys, and I'm going to elaborate that on a little bit more in this presentation here. But why is now? If you're thinking now, why is now the right time to start your RIA and go independent versus 6 months from now, 5 years from now? And is the grass greener on the other side? I took a hard look at this actually about 6-7 years ago and decided it was not the right time and place for me to do it, and made things work where I was. But I think part of this journey really needs to be, what do you want and why do you want it? What are you truly looking for in your business? And is going independent that solution? It may or may not. It really depends what you want to do and how you want to do it. And it's very interesting. It's like, there's a lot of parallels to this, to the work we do with our clients. As a CFP, it's, or an advisor in general, it's our job to figure out, like, well, what is our clients' why? What are they looking for? And once we identify and crystallize that stuff, then we can finally start to figure out, okay, where is the best place for me to do this? So knowing your objective, extremely important. If you don't identify this, it's like playing darts without a dartboard. It just doesn't work.
Yeah, and I'm sure these reasons might be objective, like Liz is saying 20% more in gross commission. That's data driven. That's a hard number. That's why she would want to move over. But it also, I bet, could be subjective.
Oh, for sure. Subjective, qualitative, and quantitative. There are a variety of reasons, and I'll get into some of that with my actual experience, which you'll see here in a little bit. So you're correct, Liz. That is one part of it. The economics don't lie, right? Mm-hmm. So we have to consider that. I do see another question from Bob. What's the name of my new venture? I think you're referring to my firm. My firm actually stayed the same. It's still Intrepid Wealth Partners. So that didn't change, which was pretty cool. It's actually what's registered with the SEC now. The new firm is just my t-shirt if you want to look at that, but that's not what we're doing today. Yeah. So anyways, know what your objective is. What do you truly want as an individual, as a family person, your business, for your clients? You have to know those things. And if you don't, then you can't answer the question, is now the right time to start my RIA? Will it be greener on the other side? You won't be able to answer those if you don't know where you are. Okay. And at any time, folks, throw in questions. Nora, you can stop me anytime. If you've got, want to just pipe one in, whatever, let's, the more that this is interactive, the better. I'm totally cool with that.
Yeah. I was personally wondering, I know, who has ever sat down with a client and not asked their objective, but what life event would you compare going independent to? Like, would it be like a divorce? Would it be like a first marriage? Would it be like having a kid?
Well, that's a really interesting
life event. Would it be like?
I would say it would be around a transformative planned event, right?
Like a wedding or something.
A wedding, a child. Hopefully, the child's planned. But yeah, something that's planned, but that will also fundamentally change your life. Mm-hmm. So that's how I would equate it to. And that's actually a really important question, Nora. I hadn't thought about it that way, but it is. This is something that you don't necessarily go back from ever, right? I guess you can get divorced, but you were still married. You still went through that. So it is a very, very important decision that should be thought out and not just done, spur of the moment type of thing. Mm-hmm. That's an interesting question. Thank you. Okay. So here are some things that I suggest that you would do. Most of us are under a non-compete or non-solicit. So did you sign one? This is something you have to look. I can tell you, when I initially signed my contracts 15 years ago, I didn't know what I was signing. I had no idea. I needed a job. I needed to get paid. I needed to take care of my wife. So I just signed it, right? I didn't know what that was until much later when I actually started looking at it. So if you haven't signed one yet, make sure you review it before you do. And if you have signed one, like, well, what are the terms? What does it say you can and can't do, and so forth? Because it's different for every situation, and even is different for the states that you live in. It depends on the company that you're with and if they enforce it or not, depending. There's a lot of gray area here. I am not an attorney. I'll tell you that right now. You should have legal counsel and make sure that you actually look into this. Feel free to send me one-off notes if any of you ever want to talk a little bit more in detail about this stuff, but we're not going to go into that today. But this is definitely something that should be on your radar. Don't ignore it. This is important. Legal counsel, very important for the obvious reasons I just said, among a number of others, actually, but also spousal. If you are married, if you have a significant other, this is a conversation that you should be having, not just with your attorney, even your accountant, but also with your actual spouse, because at the end of the day, you are putting yourself at risk. And as I say, it could be a calculated risk, but it's still a risk. How long can you go without income, right? You know, are you going to have to face some type of ramifications by leaving, you know, legal or otherwise? So these are things that you have to think about and talk through and think through with your significant other and weigh the pros and cons. They're not exactly fun conversations, I'll be honest, but they are things that are necessary. And at the end of the day, if you're going to be running your own business, this is stuff that has to be on your radar. So these are things that you should think about, and they do take time. And you will end up spending a little bit of money to actually have some of this stuff reviewed too. Are there any comments or questions about this one, Nora?
We have Amy asking if you can recommend an attorney and or firm who is familiar with RIA transitions.
So there are a lot out there. I have a couple listed coming up that I can list. And I'll even, you know, further on, we're going to elaborate on this because you have to do your homework on this. I ended up paying for a couple attorneys that I shouldn't have paid for. Perfectly honest.
That's good to share, you know, I'm sure.
Yeah, I mean, I spent thousands of dollars I didn't need to spend. And it's just because I didn't really know what I was needing or looking for, or even what questions to ask. Which was, it's frustrating.
Paranoid a little, right?
Yeah, right. I mean, I always, I mean, just like I do, at least with my clients, whenever we're doing any type of planning, is I plan for worst case scenario. And so that's what I was doing for myself, but it ended up costing more money than I actually probably needed to. I engaged services of some that I didn't need to in retrospect.
Yeah. So
but
with
that's
that being said too, you're going to have to talk to your spouse, because it's not something that you could just come home and be like, honey, we're starting our business. Guess what? You know, get your username on Red Tail started, but you actually have to maybe speak to an attorney. So they're going to see that happen. So
they are, and you have to do this as a united front. You'll see why here in a little bit, but it's really important. So this is not some of the stuff that you're going to hear about in other places, because it isn't fun to talk about. It isn't as transparent as it should be. And what's frustrating is that at the end of the day, we are in a service-based business where we are trying to do what's best for our clients. And it's unfortunate that we have to be worried about some of this other stuff because it comes down to revenue dollars. At the end of the day, the client relationship is with you, and that's what matters most. And we have to do what's right by our clients. It's unfortunate that we live in a world where we still have to worry about some of these things more than we probably should.
And Jeff is just mentioning how there's so many positives, but are there any huge negatives that you would regret, especially if you have clients that are starting in a really good place? You know, are there any negatives to it?
I haven't found any negatives in my transition at this point.
Okay.
It's funny, but I really haven't. It's other than the stress of going through the process and losing some sleep. Those are some negatives, but you know, there's a lot of due diligence that has to happen. And when I said earlier, like knowing your why and what's your objective, it's not just for you, but also for how you're serving your clients. And if you make a move, does that improve your client's situation or not? And that's some due diligence that you have to actually look into. So I don't know if there's any huge negatives. It's an interesting question, Jeff. I don't know if there's any huge negatives out there. Part of it's going to be based upon like your personality and the company you're coming with and your experience there and what you're looking to accomplish. So I think it's going to be somewhat situational. It's an interesting question, but I have not experienced any myself.
Mm-hmm.
Loving all the questions here.
Yes.
Yeah. Okay. Well, we'll keep jumping through. Please keep, throwing them at me as we go here, and yeah, we'll keep rocking it. So this is some other stuff that I think you have to keep in mind, and this is different for each of us depending on the environment we're in, but what kind of, what information and who can come with you when you make a change? What data are you allowed to take with you? And most firms will say they already have this stuff in policy. They'll say, hey, you are allowed to take this if you go, right? But knowing that, getting that information is extremely important, because there's no reason to break any rules here, folks, right? That there's a good way and a bad way to do this. And the one thing I didn't want to do is start my firm off on like this shady spot, like this bad foot where like I was doing questionable stuff. Like that is a really terrible way to start a new business. So make sure you know what you can and can't do.
Mm-hmm.
Having conversations with clients. So there's, again, is some gray area, but it is my understanding that as a fiduciary, this may be different on the insurance side, but on the investment side, if you are acting as a fiduciary for your clients, if there is a material change to your client's account, then you owe them a conversation, and leaving is a material change.
Huh. Okay.
Right.
So...
Now, again, I'm not an attorney. I'm not giving you any legal advice whatsoever. Major disclaimer here, folks. But that is my understanding. Okay. And I think at the end of the day, we owe it to our clients that they should know that stuff. If we're going to be leaving, I mean, like they kind of chose us in the first place, right? So it's kind of a big deal.
And I would say go hard on it even, try to get mailers out, emails out, brand everything, send a magnet to their house.
Right.
Just go overboard, because it does come off less sneaky, I would say, like you're saying.
Be fully transparent, be honest, give them options. I made it extremely clear that there was no obligation to do anything with me. I just shared my story. Here's what I'm doing and why I'm doing it. Because that's the material change, right? Whether they want to move or not, that's up to them. That's nothing on me. But I am making a change. I have relationships with these people. I've gone to their weddings. I've become friends with them. Like I owe them a conversation if there's going to be a material change to their financial situation.
Yeah, and I'm sure they're happy for you.
Everyone was so happy. It was the conversations were really cool. And one of my clients even kind of laughed and chuckled at me at virtual meetings, like, it's almost like you've grown up, Derek.
Oh.
Which was, it's funny. He's joking around, but it was really cool and just so much positivity out of it. And it really warmed my heart, because it showed me just how much my clients actually value me, which was really, really cool. So anyways, know what you can take. Make sure you have that stuff organized correctly. The process and having these conversations is going to take months. Okay. So if you were looking, we'll talk about timeline here in a little bit, but if you were looking to make a move next month, that's going to cause so many problems. It's just not possible, at least not well. Another thing to think about too is, are you going to keep your FINRA licenses? Are you going to affiliate with a BD? Because there are some independent broker dealers out there that you can affiliate with. Like I was duly registered, or whatever they want to call, like, because I had my investment advisor licenses and all that stuff. And then I also had my insurance licenses. So I was part of the BD. And for me, I am dropping all of that. I don't want to be part of a broker dealer anymore. I virtually don't sell any registered products anyways. So I don't need to have FINRA registration anymore. There's a number of reasons for that. I mean, part of it's just because I don't feel like I want the oversight anymore, to be honest. I'm not in that world. I don't want it. I'm very specific on how I want to run my practice, which is more of a fee only type of arrangement. So yeah, so that's how I'm doing it. So it really just depends, and you can even keep your insurance licenses and just do, non-registered products too, right? So that's another option if you want to keep doing some of that. I am just preferring everything out at this point that is not under my wheelhouse anymore. So know these things, have an idea of what's coming with you. It's also good business planning because you can kind of take a look at, be like, all right, if I do this, this is kind of what I can expect moving forward. I'm going to share those financials with my spouse just to make sure we're good. There's all these things that come up here. This is all good business planning that does take time.
Mm-hmm. And David did mention if you are going independent and fee only, something about insurance companies to stop paying you renewals is a slog of a nightmare, he mentioned, but things like that is what we're here to talk about.
Yeah, that's it. So like for me, I'm losing all of my renewals. They're all gone. I'm not getting any of them anymore. And I'm okay with that because when I looked at the economics of everything, I'm still net positive from that based upon the other economics I got from going independent. So I'll explain that a little bit more as we get through here. So it just really just depends. There's an interesting question here from Kirk. So I am sole proprietor right now. And the deal with risk, that's an interesting question. So that goes just to succession planning, right? And how do I deal with that? And whether I'm part of a large firm, broker dealer or not, succession planning is still important. And so now I have an opportunity to bring on the right successor for my firm. It's been on my roadmap for some time, but now I get to do it exactly the way that I want to do that and bring on a junior advisor to help be part of the firm. So if something does happen, we're good to go. We've got contingency plans in place. It's an interesting question, Kirk. I'm glad you brought that up. Mm-hmm. Any other thoughts or comments on this one, folks? Oh, there's a good question there. So compliance, I'll get to that, Tim. I'll get to compliance. Don't you worry. That's definitely on our radar. All right, let's keep going here. All right, so branding. This is interesting. So could you go off and just be like Joe Schmo Financial and just use your name? Yeah, you can do that. That works. But I don't know, honestly, of any independents that have done that. That doesn't mean there aren't. I just don't know of them. But I think that it would be important that if you are going to go fully independent, that part of that process is figuring out what your branding is. What are you going to call the name of your firm, right? And it does drive everything from your website, the URL you purchase, all your marketing initiatives, everything like that. So I think that's really, really important that you have that in place. Same with the logo and color scheme, and then also defining who your ideal client is. Very, very important. And what's interesting is what I was able to do as a DBA in my previous environment was that I've had all of this stuff figured out ahead of time and had been doing it for years. So when I made the transition, I didn't have to think about any of this right here, because this stuff here, although it's on one page that you're looking at right now, this is a lot of work. This takes a lot of time. And I didn't have to worry about any of it. It was all done. So there's no harm in thinking, maybe I go independent sometime in the future. Don't know yet, jury's out on it. But if you are thinking it might be a possibility, there's no reason you can't start doing this stuff now, because you're going to have to do it anyways. And the last thing you need to do when you go independent is add more work to the process, because it is a lot of work. Mm-hmm. So these are some things that, and as an advisor, this is stuff you should know anyways. This is stuff you should have to help tell your message and acquire new clients and all of that type of thing.
Yeah, exactly. It's a new year. You can kind of, whether or not you're planning to or not, just have these discussions with yourself or your team of what your brand is or what your office objective is and whatnot. I think this is the fun stuff personally, but it could depend on what you're into and what you're not, because like you said, you're gonna have to start websites and logos and all of that, and I'm sure you can outsource a lot of it, but it could be the fun stuff you do beforehand, before the contracts and all that.
It definitely can. And some of it though, like for mine, like the firm name drove my registration and legal entity process, right? So they are interconnected a bit too. I'm just trying to look at some of the questions we've got here. They just keep coming in, which is awesome.
Very,
Uh,
you could tell this is a great discussion. It's like,
yeah, this is awesome. Um, so what insurance estimated cost is needed for a solo RIA? Yeah, so I mean, you definitely have to have E&O insurance, Bob. So that's something you can do, and you can get that almost anywhere. And then you can get like an umbrella policy. There's also cybersecurity you should probably look into. There's
yeah.
a couple different things out there that you're going to look into, but honestly, it's not much different than from what you're doing right now.
Mhm.
You know, you're probably paying for all this stuff already. Would I ever consider having other advisors come under my RIA while they ran their own practice, but paid give you a percentage? Um, that's an interesting question, William. I don't know. I wouldn't mind having other advisors come under my RIA, but I've always had a problem with like me taking comp from someone else's production. Like that just doesn't feel right. So I think if something were like that to happen, I'm just totally talking off the cuff here, folks. But if someone came under my RIA and wanted to run their own practice within it, I would say it would make more sense for them to keep all of their own comp and then maybe just pay like a monthly subscription fee to be part of the brand and all the marketing initiatives and stuff like that are happening. I think that would be more fair. But again, I'm just spitballing here. So something to think about in the future. All right, cool. Let's keep going. So this is interesting. This was a process that, man, I had about 1 million questions, and I feel so bad for the people that I kept bugging on this one. But there's so many different ways of doing this. So what I ended up doing is my firm is an LLC. That's how we filed it, but it has an S corp election for taxes. Again, I'm not your attorney and I'm not your accountant. I'm not giving you any advice. I'm just telling you what I did. So that's how I am formed. Formed in the state of Wyoming for privacy purposes. You then have to get your own tax ID for that entity. You will need that. And then because you're going to be an actual employee of your entity. And something else you're going to have to figure out is your RIA going to be a state or SEC registered? Now, real basic, the difference between the two is your AUM. If you have under 100 million of AUM, you will most likely be a state registered RIA. If you're over, you can get SEC registration. And you might ask, well, why would I want to do that? Well, SEC registration means you can work in pretty much any state as long as you do a notice filing. It's also less expensive. And then you're dealing with the SEC for annual reviews and all of that type of stuff. It's very systematized, very, what's the word I'm looking for? Like it's the same across the board for all of us. On the state side, each state has their own rules, their own auditors, their own way of doing things. So it can be a bit more, I've heard from other advisors, a bit more of a pain, to be honest. I got SEC registered, but I have under 100 million of AUM. So I did that because I am licensed in at least 15 states with 5 clients or more. As you guys know, I've been doing the virtual advisor thing for a long time. And because of that, I have clients all over the place. So the SEC has an exemption. I forget the technical term for it, but it's a multi-state advisor exemption, and you have to be licensed in at least 15 states. And what's cool is you have to prove that, right? So what you can do is you can actually apply for SEC registration, and they give you a 120-day exemption window to bring all your clients on for all the different states. And then you just update your ADV within 120 days to say, yep, here are my 15 states. We're all good, done. So kind of cool to know, definitely worth knowing. Notice filing, all that is that each state that you're going to end up doing business in with more than, most states it's 5 clients, some states it's 1 client. If you have more than that in that state, you have to notice file. That costs money, so keep that in mind. The U4 update. My U4 had to be updated for me to be able to switch firms, right? That's just how it goes. That's just a national, registration thing. So you cannot be duly registered, is how I understand, between 2 different firms. So I had to submit my letter of resignation. And after I did that, then I could finally get on the new platform and then start the process of actually updating the U4. That's our responsibility to do that. And your compliance firm that helps you start up your RIA will actually help you do that. And then your existing firm will actually update your U5 within a certain amount of time. Not quite sure.
What moving parts? Woo.
A lot of moving parts. So I'm going to try not to get into the weeds here too much, folks, but these are things you need to know about.
Yeah.
For your LLC or whatever corp you set up, definitely get your own business bank account and credit card. You're going to need that stuff. Look into a payroll service, even if it's just yourself. And then you also have to think about, like, I need a retirement plan. Where can I do that? Right.
Yeah.
I need health and E&O insurance. Where am I going to do that? Right. So these are things you're going to have to get onboarded. And there's a lot of options. There's a lot of options out there, but it's going to be a time suck to figure out what the right solution is for you. So there's a ton there. Looking at a couple of these questions. Let's see. Yeah, this gentleman has quite 6 figures in annuity trails every years. Yeah, I wouldn't want to walk away from that either. That's pretty good. I guess it depends. Can those annuities be moved into managed money and save your clients money in the process without paying surrender charges, right? Maybe there's an opportunity to move a block of business. I don't know. Obviously, you have to do what's right for your clients. That's always priority number one. So that would be something that I would want to look at to see if you could do that. But there's other issues that you would have to be careful with there. Yeah, you might want to send me a message on that one.
Yeah, Derek's such an honest guy, dude. Like, you're awesome. You're so awesome. Like, the way you really listen to people, and you're genuinely very helpful.
Try to. Yeah, I mean, like, at the end of the day, what else we got, right? I'm telling you how it is, and I don't want to upset anybody. I'm not upset at where I came from or what I learned, and I'm just, if you can learn something from this, rock on.
Yes.
Let's see. For SEC registration exemption, do you need licenses in 15 states? Yes, Jerry, but there's a couple states you don't. Let me see if I have those.
I know, pop quiz if anyone knows them.
Yeah, right. So all states, if you have 5 or more, you have to have 5 or more clients, or more than 5 clients, in all states for this exemption to qualify, except Louisiana, Nebraska, New Hampshire, and Texas. You only have to have 1 client in those states. To qualify for the exemption, you need to be notice filing in 15 states or more. So if you have 4 clients in Wisconsin, that doesn't count. You don't have to notice file there. So that does not count towards your exemption. So hopefully that answers the question. Okay, let's keep going here. This is great. All right, here's a whole bunch. Again, I'm not going to try to get into the weeds here too much, but you do need to look at, registration, obviously ongoing compliance, and who's your custodian going to be. So was this a black hole for me, because there are so many options out here. RIA registration, fortunately, though, has been commoditized. It's a pretty straightforward process, and there are a number of firms doing it. So you need to find one that you like, that actually doesn't think of you as a number. I interviewed 4 or 5 different firms, and 2 of them made my hit list, and I ended up going with the first one you see on the list here, called Fin Compliance. And it wasn't just a price thing for me, although they ended up being the least expensive. I also felt like I was a human being with them more than any other firm. Like, they actually listened and gave me time and tried to help and consulted, and didn't just try to pull stuff on me, this way or that. So they are great. What they will do is they're going to help you get your ADV and all the other forms that you need to register. They help you draft all those. They also take you through the entire process to actually register with the SEC or state, if you're going to do a state filing. There's a lot more to that. I'm not going to get into the details. It's going to take somewhere to 60 to 90 plus days for that registration process from start to finish to actually happen. So again, if you're looking to leave next month, it's not going to happen. All right, you're going to have to give some time for this to get it done. It's all done electronically, but they're going to ask for you for a ton of different stuff. You got to pay some fees. It's not much. It's a couple $100, I think, for me to do all the filing and all that kind of stuff. But then that's done. The cost, though, is having the firm do everything for you, drafting all the documents, getting you into the SEC system. And it's actually through FINRA. It's funny. You actually have to register your RIA through FINRA instead of the SEC, which people don't realize. It's weird because they do share information. So working with one of those firms is going to be in that price range that you see there. There are additional fees. Each state, you have to notice file I did a notice file yesterday for 3 states, just 3, and it cost me over $800. So each state's going to be different on what that is. Now, all of us that are IARs already, you are paying your fees every year to be registered. So you're already paying these, but it's going to be more because you're going to have to pay your firm fee and your fee. Because remember, you are still going to only be an IAR of your RIA. It's a lot of acronyms there. Sorry, guys. Yeah. So, and then you get all your ADVs, the form CRS, all of that stuff that you have to have ongoing. The firm will help you do all that. Ongoing compliance. I am my own compliance officer now. It costs me $29.95 a month for me to get all the compliance stuff I need. And then there are additional tiers like this one here at $300 a month. It just depends what you want to do and not do. And then these firms literally have templates to build out your entire compliance program. So it's not as scary, it's not as much work, and it's not as expensive as you may think it is. So just keep that in mind. But yeah, you most likely will be your own chief compliance officer if you are a small firm. If you end up getting a bigger firm, you might end up wanting to have someone do this. There are fractional compliance officers that you can, pay like a monthly subscription to, and they'll give you X hours to do things. It just depends how big your firm is and what you're looking to do. But what I liked is that I used Fin Compliance. They do both of these for me. So it's very easy just to have everything in one place.
That's legit. And you're kind of advising, splurge on this, don't.
Yeah.
Yeah.
Yeah. You don't want to mess around with this. You need to show the SEC or your state that you are serious about doing things correctly. We owe that to ourselves and to our clients. Mm-hmm. We can all make a ton of money in this business, folks, doing things legally. So just do them legally. Okay. No reason to be messing around with other nonsense.
That is legal financial advice.
Right? Right. Totally.
Do it legally.
Oh, man. Let's see. There's a couple of questions just before here. So let's see. Some firms that offer tax prep set up a separate company. Yeah, tax prep is going to be a separate line item. Your tax company is not an RIA. It's a separate thing, but you have to be careful there because one, it's an OBA, right? You'd have to list that, and you have to make darn sure that your clients know that, hey, I'm not Jane CFP anymore. I'm Jane CPA, right? And it has to be a very, very much of a distinction there. I wouldn't touch it with the 10-foot pole. Honestly, I would rather outsource it. But again, it depends how you want to run things.
And I'm sure as soon as you try registering your LLC, you'll be solicited to add on this tax service or add in that.
There's all sorts of stuff, sorts of stuff. Yeah, I get all as soon as I got my registration with FINRA and the SEC went live, I started getting hey, we saw you just got registered. You want this? So it's going to happen. You're going to get spammed on stuff. Just ignore it.
Kind of just keep your eye on the prize. Don't let all of those get you distracted. Kind of just make your list, stick to it, do your research, and go on. Don't get distracted.
Exactly. You got it. Any thoughts on RIA in a box? That is another vendor I looked at. Long story short, I didn't use them. I'm not going to say anything bad about anyone else. I'm just telling you who I used and who I didn't. How long did the SEC approval take out of that 60-day time frame for me? So for me, I thought it was fast. Mine took about 30 days. So my registration went pretty quick with the SEC, and that was it got approved right after Thanksgiving. So it was over a holiday period too. So that was interesting, really interesting. And here's a little something extra. So every one of us has a U4, and we have to update that U4 with any material changes. Well, I was registering your U4 and updating your U4 is separate than what your RIA is. So my RIA was approved, but I did not affiliate with it because I couldn't. I wasn't allowed to until I resigned. So there is a distinction there, folks, that you can actually get some of this stuff set up in anticipation of making a move, but not have to affiliate with it. And I was very fearful that some might find out about it. Mm-hmm. Being really transparent here, so hopefully this is good. but you're not breaking any rules there that I'm aware of. But you can do this in in lockstep with actually getting ready to resign from your other firm instead of having to wait to do one on the same day or time it up all on the same day, which is really a challenge. So again, you can send me a direct message if you want more details on that, but there's some actually pretty cool ways for overlapping this stuff. Multiple custodians. Here's the next thing. So yes, you can use multiple custodians. I moved and am moving everything I do for my investment clients to Altruist. I love their technology platform. I looked at a multiple of options, and they are just, in my opinion, the most forward-thinking, best ones to use from a custodian perspective. But remember, they are a technology platform / custodian, which is using Apex, Apex clearing on the back end. But it's been a wonderful experience. I can literally open up a new account in 2 minutes. An ACAT transfer request takes 30 seconds. So it's all really, really awesome. But yes, you can have multiple custodians. So I have a really strong relationship with Morningstar, and through them was able to get also affiliated with Fidelity. Am I going to use Fidelity? 99% chance, no. But I have access to them if I need to for whatever reason. So yes, you can have multiple custodians. You just have to disclose it. That's it. But other than that, it's fine. It's totally cool. A lot of them do it. It just depends what you're looking for. As I say here, like, what is the tech platform like? What's the experience like? What type of service do you get? Like, I've had some service stuff I've already had to do for my clients on Altruist, and I literally just chat in their chat feature on my dashboard with them, and I get an answer within 2 minutes.
Nice.
It's an amazing experience versus being on hold for an hour, you know?
Right.
And then also, like, what's the client onboarding experience with that custodian? Like, is it all digital? How is that digital experience? So on and so on. And then what does it cost? Like, what does it cost to actually be on that platform? I know some advisors are paying like 30 grand just to be on the Fidelity platform. I am not paying that, I'll tell you that. So knowing what it costs to be on these different platforms, Altruist is by far the most affordable platform out of all of them at this point. Let's see here. Yeah, it's interesting. So Randy has a question here about minimums on different platforms. Well, then I would ask you, like, do you really need to be on that platform? Right? Altruist doesn't have any minimums, which is pretty awesome. So it really depends. And like, why are you on that platform? What are you getting from that platform that you can't get elsewhere? It's almost like this whole conversation. Do I go independent or not? Right? Like, maybe it's time to reassess the multiple custodians you're using and what you're getting from them in return for what you're paying them. So there, again, a lot. Don't want to go down the black hole any further, but all stuff that you should have on your radar. Yeah, here's how the one I use, folks. I'll just put this in the chat right here. This is the company I am using. Actually, I think that only went to hosts and panelists. So if someone else could publish that, please, that would be awesome.
Yeah, I got you. I'll throw that in.
Sweet. Thank you. Okay, assembled.
Thank you, Liz.
There we go. Awesome. Thank you. All right, so the tech stack. This is really, really important. I'm going to show you what I did and who I use right now instead of like just belaboring this page too much, but you want to choose the right tech stack for you, and you don't need to do it too quickly. Don't go get a whole bunch of shiny bells and whistles all at once and then like not know how to use it. So it takes time, but these are all the things that I wanted to have to be able to run my practice. And let's face it, the work we do as advisors, there's a ton of stuff we got to do here and things we have to manage. It's crazy.
Yeah.
But these are the high level things that you should have. I'll just show you what I'm using. These are all of the different tech vendors I am using right now. So you can see all of them. And what's so cool about this is you can customize this. As a fully independent one, you can pick and choose which tech vendors serve you best given the type of practice you want to run. So I was able to pick all of these and do it the way I wanted to do it. Most of these actually integrate with each other, which is really cool. And these were the ones that I thought I needed right off the bat to be able to run my practice. Some of them I was already using, so it was a non-issue. Other ones I had to bring on board. And there'll be more to come. Like another one I haven't done yet, but I'm planning on is Riskalyze, right? But I have to start somewhere. And part of the process of going independent is onboarding some of this tech. So I needed to figure out, what do I absolutely need to start? Let me get onboarded with those and learn those techs, and then I'll bring on others as I go. Let's see, Bob's asking a question. Is file storage through financial plan software good enough? My personal opinion, Bob, this is not legal advice, but no, it's not. I think that an SEC or state reviewer would probably expect more than that. Like I know like eMoney has a capability for that and some others. I use eFile Cabinet, also known as Rubex. They're 450 bucks a year. It's totally worth it. It's cloud-based, highly secure. It's totally the way to do it.
Yeah, it sounds like no matter what, you're going to need an Excel sheet for your budget. You're going to need probably like a Word document to do a lot of research, do your research in this. You're kind of given a lot of answers here, which is great and appreciated, but I can't imagine how many hours of research it took to come to these conclusions,
So many, because like there's demos you have to do.
Yes.
But again, all of this goes back to the very first slide I showed you folks. What's your objective? What are you trying to build? What's your why? If you don't define that, none of this other stuff's going to happen. You're going to be so frustrated, you're never going to do it.
Yeah. You'll table it forever.
You will. You just will. So figure out what you want and then figure out what you need to make it happen. Yeah. This is the stuff here that I needed to make my dream a reality right here.
And then get visual. This stuff would be great on a whiteboard, throw it on a whiteboard and say,
I don't know if you guys can see, I've got a huge one right here, right? And I use it all the time. It all the time. Yeah, it works great. Let's see here. A couple other questions. I don't want to get into this too much. I know Redtail's got a great storage for that as well. So you could use Redtail for sure. The only reason I'm not is that I've been using eFile / Rubex for like 5 years, I think 8 years I've been using them. So like I've got all my stuff in there. It's already there, but Redtail totally can do that. Redtail also has its own email option. Yes, I'm giving a plug for Redtail, but Redtail's awesome. Redtail's awesome. Okay. They're great. That's why I went with them versus others. So there's a ton of stuff that you can do all integrated with Redtail that you're talking about here in the chat.
Yeah.
How many staff do?
You can make a list of questions to ask all these vendors, does it cost this for conversion? Does it cost this for training? Does it cost this for, you're going to have to make these phone calls and kind of do your research there as well.
Oh, you totally will. Like as an example, I was an eMoney user. eMoney, the street version, was going to be less expensive than what I was paying where I was at. But I was only using it like a power user for maybe, I think it was like 50 clients, even less households. I was going to be charged over $3,000 to have that data ported over to the street version of the product. I'm like, what's the point? Like that's a lot of money to move some data around. So I didn't do it. And like I was a major fan of Asset Map anyways. So I did the demo of Asset Map, worked great, did everything I needed to do. It was a done deal, and I saved a ton of money in the process.
Yeah, and that answers Noah's question of why Asset Map over a traditional financial planning software.
Right. So for me, like I like cash flow, but I also I'm a conceptual planner, and I like talking about things visually with my clients. Asset Map does that better than any other tool out there, but they also have all of the cash flow projections that I like to run. I can tell you, in over 15 years of doing this, folks, my clients don't care about Monte Carlo simulations. They don't care about all this really like long drawn out, Excel, like everything cash flow, well, not just cash flow, but everything. Like these just really complex, presentations we can do. They like simple. They want to know if they're going to be okay. They want me to show them how I know they're going to be okay. And Asset Map does that better than anything else out there, in my opinion. I'm not getting paid by them, by the way. Okay. But it worked for me. That's what I want to do. But then again, it depends. What type of practice are you running? What do you want to do for your clients? What type of clients do you have? Because maybe there's another tool out there that does that better for you. It just depends what you're trying to run. Okay. There's a lot here. All right. Have a realistic timeline. We've talked about this a little bit already. It does take time. Give yourself at least 6 months, folks, if not longer, to do everything correctly, to do your due diligence, to have conversations, to do your demos, to bring things on, to get things registered, all of that stuff. It's going to take time, and don't be afraid to pay for help. You're going to want it. Otherwise, if you try to do this all on your own, forget it. Mm-hmm. It's just not worth it. Because remember, when you're doing all this, you're still running your practice full time. right? That's the thing. So you're starting up a new firm and doing a ton of research while you're also running your practice,
Yeah.
because you have that obligation to your clients still. So give yourself time to really get things done as best as you can in order, right? Submitting my resignation letter was bittersweet, right? I had been at the same firm for almost 16 years, but it was time to go. Did it via email with I scanned in a letter that I signed, and that was it. That was it, and just be very respectful, leave on a good foot, hold your head up high, be grateful for what you were given thus far. There's no reason to have bad blood, but then, after that happens, then a lot of work happens. Like New Year's Day, the 1st of January this year, I spent 8 hours working to get the new firm up and running and to get everything like pushed on, right? Turn the on switch for everything. So it is going to take some work. Just know that the work doesn't stop just because you submit the letter. That's almost when it starts. But that's just part of how it goes. It's just the way it is. All right. So why did I go independent? 3 main reasons. One is that it was the right thing for my clients, right? So I am a CFP, I am a fiduciary. I focus a lot on planning and investment management. And for me to be able to do the best for my clients, going independent was that answer. I had tried and tried and tried to do things within the environment I was and was just not able to. And at the end of the day, I just needed to do the right thing. Because if I put myself in one of my clients' shoes and they're talking to their buddy or they're searching online and they find out that they can do what I'm doing for them and do it either the same or better and for lower costs, with more options, better experience, I would want to know about that. And if I found out my advisor knew about that and didn't tell me, I'd be really upset, right? So it's best for your clients. That was one of the reasons I did it. Also for me, it was the best for me, for my business and my family. As I'll show you here in a second, my revenue's going up, my overhead's going down, and now I have the freedom to not only design my firm the way I want to, but also to pursue these other fintech products that I'm working on here. I am 100% control of my future. And that's really important to me. I don't know, I've always had that kind of independent skew anyways. So now I've fed that full control over everything that I want to do and to be able to provide for my family the way that I really want to. And then why number 3, man, the puck is headed in a certain direction and I want to be where it is. It's going there faster and faster. And the industry's headed in a different direction. I am not saying that the old way, like the insurance BDs and the wirehouses are going away. They never will. We need those products. We need those services, but how they are distributed. My friend Adam Holt and I talk a lot about leading with advice and where the industry is going and about these new digital marketplaces that might start coming up for all these products. So again, my crystal ball's never worked, but this is where I see the industry going. So I felt like I just had to be where the puck is headed. And I didn't want to sit to where things were. It just wasn't making sense for me. So these are my whys.
Yeah, and you wear a lot of hats already just within your firm. So these other firms that you have established and coupler that you're starting as well. That's awesome. You're wearing tons of hats.
I am. And yeah.
It's going to help you apply it to the other things too.
It is. It gives me some real insight into our industry, the world that we all work and live in. And it also gives me more time now. I actually have more time to run my other passions and be with my family and still run a very efficient practice. It actually ended up, it's making less work for me actually by doing this. There's a ton of work to go through, but on the other side, it'll actually be less work. I'll be more efficient.
Yeah.
So a couple of the little things I learned, the buck does stop with you at the end of the day if you're going to do this. Question and answers. I mean, that is the game. You are going to be asking and asked a ton of questions if you do this from vendors, from your attorney, your accountant, from anybody and everybody. So you have to be knowing that and just like think this stuff through.
Yeah. And that's what I noticed with you. You had a lot of conviction. So I think you really need that conviction to go through with it.
You do 100%. If you don't have that early conversation about your why and your objective with your spouse and get clear on that, you're never going to have the conviction to actually go through. Because it's one thing to talk about it, just like I said at the beginning, there's a lot of talk about it. That's great. You know, that's pie in the sky stuff, but to actually make it happen, darn it, you better have the conviction to make it happen. Freedom of design, it is a double-edged sword. You have the opportunity to build whatever you want, but that means you have endless opportunities, right? So endless choices. So there's some things you have to be aware of there. And then be wary of who you partner and pay. As I said earlier, there are some that I paid that I probably shouldn't have paid. And don't jump in with anyone right off the bat. Do some due diligence and do your gut check. How do you feel? Does it feel like this is the right vendor for you, the right partner for you? Like if you're going to be giving them your money, like at least for me, like I want to have that human element a little bit too, right? I don't want to be just another number. I don't mind if I'm a number on Netflix, right? Or at the McDonald's drive-through. I don't want to be a number when I'm doing stuff that is this important. So things that you need to think about. It's going to be scary and stressful. I lost sleep. It's a lot of work. It's a lot of stress. I second guessed myself all of the time. What if this happens? What if this doesn't happen? Is this really the right thing to do? Am I going to make it? Can I manage this next 6 months? Lots of questions, self-doubt, and so forth. And that's okay. That's okay. Just know that that's on the horizon, and plan for worst case scenario. And when you plan for worst case scenario, you sometimes second guess yourself more than you may want. You may lose more sleep because you're more stressed thinking about all the bad things that can happen.
Yeah, like, are you human if you don't think about these things?
Right, right.
But you're kind of advising, go into it knowing it's kind of like your wedding day. Go into it knowing something might go wrong. And
100%, 100%.
You know, might rain or
exactly right.
Show up, but at least you'll know. You know, you might be up a couple hours at night thinking, what did I do?
Right. But then that wedding day is going to be that much better if you did all the right stuff. Right. And for me, a lot of it was the conversations I was having with clients. That's what made it all worth it, because just such warm, heartfelt, great conversations and support from my clients. And that's what was important.
Yeah.
You know, it made it all possible and worthwhile. But it is going to be a tough journey. I'm not going to sugarcoat it for you folks. It's a lot of work. Now, if you're just starting off, you've never been an advisor before, you don't have to worry about this part. It is a lot of work, but you don't have to worry about all the stuff that can go wrong. You just got to build it. But if you are transitioning from an existing relationship, yes, it's going to be work. Economics, there's some questions on this. So my clients on average are saving somewhere between 10 and 50% a year on their investment management fees by making the switch that I did to the custodian that I'm using. And you know, that's part of our fiduciary responsibility, right? I mean, fees aren't everything, but they are important, and it does directly impact the future of their investments and their financial situation. So we need to know what they are and if there are better solutions out there. It's just that simple. My revenue overnight increased 30%. None of the money that my clients are saving, by the way, is contributing to my revenue increase. Right? This is separate. This is just because of efficiencies of technology and scale, and actually getting to keep everything I earn. And then there's a question about overhead. I know, so like, you know, how long, you know, how much am I paying for overhead? My overhead, including staff, and I only have virtual staff, by the way. I don't have any W-2 employees or subcontractors. I only have virtual assistants who are all paid for on my credit card every month. But my total overhead, including all the tech you just saw with my staff, is less than $2,000 a month. I don't pay for rent. Like I don't have rent because I just work out of my, you know, wherever the hell I want to be. But so that's what it is. So it's better for my clients. It's better for me. It just makes sense. And you can't argue with this. I mean, at the end of the day, folks, we're money people. We should be probably pretty good with their money, right? If we're going to be helping our clients. So like, how do you argue with the economics here? I don't know if you really can, to be honest. Let's see here. I know. And
if we're learning anything today, it's that this discussion is way beyond this 1 hour scheduled session. So we are beyond the hour. I'm so sorry if we're taking anyone's time. We'll try to continue to talk. Just because
we're almost done. I'm almost finished. Yeah, for sure. Yeah, no, there's a ton here, folks, and you know, hit me up if you've ever got stuff.
Eric, I'm gonna have to have you back because this is
happy to.
It's a great discussion.
Yeah, I love this. This is really a lot of folks chiming in here. Let's see a question here. How long until revenue generating again? If you plan it right, Jerry, within 30 days.
Nice.
right? So you can time that. So it goes pretty quick. Let's see, another question here. I'm of the opinion that compliance is going to be heavier and heavier on the RIA side. Do you think it'll become harder for small RIAs to survive? No, I don't think it will, for all the reasons that we've just looked at here. As long as you're doing what you're supposed to be doing, more and more RIAs are in existence now than ever before. So the resources out there for compliance are there, and they're getting less expensive. The SEC is very familiar with RIAs, so are the states. So if anything, it's going to get easier. Don't ignore compliance. Make sure you have everything in place, but it's not as scary and as bad as it may seem to be.
I agree. Just I feel like demographically, they have to start incentivizing this.
Oh,
you
yeah.
know?
Yeah, for sure. Like that's just, I mean, with all the things going on in our industry, best interest, fiduciary standard, more and more CFPs coming online, and all that stuff's great. And we have to pay attention. But you know what the biggest driver is? The consumer.
Mm-hmm.
They want independent, objective advice more than anything else because they have access to information now. So that's what they're looking for. That's the whole thing about skating to where the puck is. Some questions about virtual assistants. So in the States, I use a company called Delegated. Tell them I sent you. They're awesome. They're dedicated. I've been using them for years. They're great. I also have a firm out of South Africa for all my digital marketing needs. They're called Prime Pixels. They're also awesome. So I've got a team of virtual assistants, and depending on the workload, we're, anywhere from 4 to 6 people at any given time, depending on what we're doing.
There we go.
Yep. All right. So let's kind of wrap it up here, right? So is now the right time for you to start your own IRA? I don't know, right? I cut my teeth in the insurance BD area, and I am very grateful and have a ton of gratitude for that experience. They treated me very well. But at a certain point, I knew I had to make a change. And that's not for everyone. Some of you will never change. That's totally cool. There is nothing wrong with staying in the situation that you're in if that's what is best for you and for your clients. There's a lot of great companies and great people out there at those companies. So I have nothing bad to say about those. But for me, I needed a change, right? So I needed to be able to do what I wanted to do for my clients and for me. And I had to ask that question, which you can see here. Was I able to do it where I currently was? And I wasn't. So I needed to be able to go somewhere else to do that and do the better for my clients. Going independent was that solution. And if now is not the right time, then what needs to happen for you to make that change? Like, it took me years to figure this one out. Part of it is because I didn't have information like I'm giving you today. I just didn't know. But I think this is stuff that you need to think about. And then when is not the right time? I've been asked this a lot actually over the last 2 weeks even. I would say that it's not the right time, in part, if you can't afford it. Mm-hmm. You need to be the resource for your clients. And if you're not in business, you're not a resource. You're not able to help them. So for me, I did this exercise, and for any other advisor considering, I would ask you, like, take a look at your own personal financial situation. What do you gain by leaving? What is your income and expenses going to look like by leaving versus what it is today? And can you afford that if you make that change? That would be a big driver there, because if you can't take care of yourself and your family, how the heck are you going to take care of your clients? Now, there's more to that question than just that, but that's a big part of it. Mm-hmm. Answer that one first. Yeah. You can follow me on social. I'm really active on LinkedIn, kind of active on Twitter. I've got a great blog. It's actually ranked, I think, number 37 out of top 100 blogs out there for financial advisors.
Nice.
So go check that stuff out, folks. You can find it all there. Don't worry, no sales pitches. Just trying to help.
You're amazing. Yes.
Thanks so much for joining us today for this particular session. If you have any questions, please don't hesitate to give us a call at 800-206-5030, option 3 for support, or just shoot us an email over to support@redtailtechnology.com. Thanks a lot and have a great day.